Good morning. Good morning. How you guys doing today? Glad you could join me this morning. Had a busy morning, so this was the best time for me to jump in with you guys and take a look at these markets. Um, I'm hearing some comments in the Telegram chat regarding these markets and how they're difficult to trade. Um, there's a lot of people saying a lot of things out there about the difficulties of these markets. And one of them is, there's a lack of momentum from the tariffs and all this other stuff. The bottom line is, regardless of tariffs or any of that stuff, the market is in the situation that it is because the market is in the situation that it is. Okay. From my perspective, it has nothing to do with tariffs. It has nothing to do with anything. Whether there was tariffs or no tariffs, the market would be in the same exact situation that it is. Okay. It took a long time for these markets to get into the situation that they are in. It's not that Trump became president and then tariffs were brought in and all of a sudden the markets found themselves in that situation. That's not the case. The markets took a long time to get here. So I've been telling you guys that I've been laying out for you guys what's happening on each of the time frame. We've been taking a look at what the biases are, what the trends are, so you know what the odds are. You should have some idea of what the odds are of trading those assets. So we'll go through them again today, and we'll take a look at gold. We'll start off by taking a look at gold, and we'll take a look at all the major time frames, and we'll look at what's happening on each of them so that you have an idea of what's likely going to take place and also have an idea of the risks involved in trading these assets, okay? All right, folks. All right. Before we do that, let me just set something up here. There we go. All right. All right, so let's do what we always do. Let's take a look at the time frames and look at whether or not they're bullish, bearish, and why they are what they are. Okay, we look at the monthly time frame, and we see that price is moving to the upside. So we would tend to say that it's bullish, right? Because it's moving up. But you have to have a proper definition of what bullishness is, because there's many different types of bullishness. Bullishness for now, but going to end very soon. Bullishness, but it's going to continue being bullish for a while. If you don't have a proper definition for it, then you may interpret things wrong. You may look at the monthly chart and say, oh, it's bullish. Okay, so then buy it. Buy gold and hold it for a few months and see how well that's going to work for you. If it works well, you're lucky. If it doesn't, it's because the chart is way overblown and you bought, at the highs, and you shouldn't have done that because there's nothing to dictate that for price to continue moving higher. Okay, there's nothing dictating that price is going to go higher. So you have to be able to determine, if there's risks here, and there's major risks. Okay, just look at where the trend line is. All right, just look at where the trend line is, and look at where price is. Are you okay buying that high off of a trend line? If you are, then you might as well go to the casino and play the worst odds casino game there is and bet all your money on it, because you're doing the exact same thing. Okay, the odds are stacked greatly against you buying gold at these highs, considering, and not even considering what we see in terms of the CFTC positions and what the banks are doing with their positions right now and how close they are to maxing out on their long positions. Not even considering that, it's low odds, just technically. Okay, so I wouldn't be buying gold with your money. I wouldn't do that. I'd have more respect for your money than most people would have for their own money. I would not be buying it at these highs. The only reason why somebody would be buying it at these highs is because they've been watching price go up and they're like, I don't want to miss out on this move to the upside. That's total amateurish thinking. If you're thinking that way, you have to stop thinking that way. You have to have more solid foundation of what you base your trades off of, not just, well, it keeps on moving, because that's not a good reason to be going long gold. Okay. And I know there's a whole other list of reasons why people think you should be buying gold. By all means, trade based off of that if you feel comfortable. Okay. But, if you're here watching me and watching my channel and watching the analysis that I do, it's probably because taking that advice hasn't been working for you. Okay. I don't go and watch other people's YouTube channels, and there's a reason why. Because there's nothing nobody can say that would be of any benefit to me. All right? I trade the markets based on my knowledge, based on my understanding, and my knowledge and understanding is based on the hard work that I've put in to understand how the market actually works. I have a relationship with the market. It's been created over many, 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 many years and many, 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 many more hours of hard work and study. So the knowledge I have of the markets, in my opinion, surpasses the knowledge that I could gather from anybody else. And believe me, I've checked in on what other people do on their YouTube channels, and I'm not impressed. Not in the least, to be honest with you. Not in the least. So there's no reason that anybody could ever give to me to make me make a trading decision. I just wouldn't listen to anybody, okay? And so I'm here trying to share with you some of the knowledge that I have in an effort to make you understand and see a different perspective, make you understand how the markets actually work, and help you see a different perspective on things. Because if you're not trading successfully, we can help you with that. Help you with trading, with changing your understanding of the markets. Okay, I trade successfully. I don't need help in trading. I can do very well by myself. Throw me on an island with my computer and access to nobody or anything else except for the markets, and I will do extremely well. All right, probably a lot better than I'm doing now because I'd be super focused on just my trading. But I'm here doing my trading, and I'm also sharing this knowledge that I've gained over the years with you guys. So hopefully it's helpful to you guys. So here's the situation, right? Did you notice that we spotted and found the exact demand zone that price rallied up from on the daily chart? Okay, yes. It's not by chance that we're locating these things. And so price is now moving to the upside, and we have this trend on the 4-hour time frame. Price at the highs, demand is down below. Could it drop to demand and then rally up? Sure. Sure, it could do that. So what? You want to buy at that demand zone? Buy it. Take a gamble and see how high it's going to go up from there. That's your decision. I wouldn't touch this. I've got my money in assets that are moving in the direction that I placed my bet on, and they're doing extremely well. And I know exactly where my targets are, where my targets should be, and where price should go based on the dynamics of what's taking place on the charts. And I sleep well at night, extremely well. And I'm beating the markets. I posted our returns so far for the year. I'm beating the markets. Did you see how the market dropped so hard, but my stocks just dropped a little bit? There's a reason for that, because I've been telling you, I buy stocks that the big money are buying. So when the big money is buying those stocks and buying those assets that I'm buying, the market can tank, but because they've got so much buying taking place, they hold those markets up. And that's why the drawdowns were very minimal considering the drops on the overall market indexes. So I sleep very well at night. I have zero concern over my portfolio. Zero. Not even 1% concern over my positions. And it's a wonderful feeling to have. And you don't get this feeling overnight. It takes time. But you also have to make the right trading decisions. Okay, so gold, that's the situation with gold. Would I be buying it now? No, not with your money. Would I be selling it now? No, not with your money. I wouldn't be touching it. In fact, I don't think it's a good investment to be buying or selling right now. Do I think there's the possibility gold's going to go much higher in the future? Yeah, sure. Yeah. Okay. I do think that. But I'm a trader. I'm looking to make money. I'm looking to put my money in something that's going to make me money in a relatively short span of time. Okay? That's what I'm looking to do. And I'm looking to put my money in situations that have high odds of increasing over a short period of time. I'm not an investor that's looking to buy something and hold it for 100 years. That's not what I'm doing here. I'm looking to make money and get a good return. So gold, in terms of getting a good return in either direction, is not good in my opinion. All right, and I gave you my reasons why. So let's go over to silver. You notice how weak silver is looking as gold is doing its thing. Look at what we're seeing here. Yeah, a little bit of upside, but you see all this downside here? The silver doesn't want to go. I mean, if you're listening to what the markets are telling you, the markets are telling you, I'm not ready to go higher. Look at me. I'm like, I'll go up because you're forcing me to, but I really just want to go down. I mean, that's what the market is saying when you look at the different time frames. Look at the 4 hour, look at the daily chart, okay? It goes up a little bit every time gold shoots to the moon, right? But then it's like it's heavy. Price is heavy. It just wants to drop. This tells me that this is not ready to go. And when gold drops and finds its foundation or builds its foundation, because right now, gold is in the process of potentially creating a foundation for a bigger move to the upside. The existing areas of demand that could have been used to propel price much higher, they are becoming invalid. All right, that's a big thing to recognize. But there is potential that new foundations are being built. Potential. It's not there yet. And so we're going to have to wait and see what it does. So it's very weak from what I'm saying, from what I'm seeing. So silver looking pretty weak as well. It looks like it's not ready to go. I suspect that we are going to see a bigger move to the downside at some point, and and then in the future we'll get the big move that we're expecting. But it's not ready. It's not ready now. Was also looking at copper. Copper's looking like a good chart to trade. Not yet, but soon. If I take a look at copper, one thing I do see is that we had an institutional buying zone here that has since been taken out. And this tells me that over the short term, we could probably expect some momentum to the downside. What I do like here is if you look at the weekly chart, you'll see that there's a nice area of demand down here. And that tells me the weekly chart is the chart that I want to be focusing my attention on. Okay. So we have an upward trend on the monthly chart, not the greatest upward trend, but we got an upward trend. And on the weekly chart, we have a significant area of buying that has recently been created. So it's looking pretty good. Um, a drop in gold, a drop in silver, a drop in copper down to this area, would present itself with a really good opportunity for a long position. So I'm going to wait for that. If it gets down there, I'm a buyer. Okay. But I want to see gold retrace. I want to see silver retrace, and then we'll take it from there. All right. So this is what I'm watching for with those with those metals. All right, let's go to the next one. Let's look at the Aussie. What's going on with the Aussie? If you want to trade currencies right now, go right ahead. The odds are stacked greatly against you. Okay, Aussie is not looking good. It's just sitting sideways. If we take a look at what's been taking place here on the monthly time frame, we have 1, 2, 3 basing. That's 3 months of doing nothing. Okay, 3 months of doing nothing. You wait until it breaks out of the range. Otherwise, it's not good odds. All right. So I'm not touching it right now. Euro, been doing not much. Okay. Still sitting at those highs. We talked about this before. Yes. Is there a bearish bias? Yes, there's a bearish bias. Why is that? Because short-term demand was removed. Not because there's a downtrend, not because there's a higher time frame downtrend that we're aligning with, nothing like that. Only because a daily demand zone's been removed. Is that high odds? No, it's not. So I wouldn't be opening up a short up here. And I see people doing that. I see people who are apparently incredible trading gurus that could turn a small amount of money into a massive amount, just like magic, in a short span of time. They do the impossible, and yet they're shorting the euro right now. The odds of the euro dropping the way that you would want it to drop are like 15%. Okay? So, like, do you want to take that short? If I was forced to take a short, I would short at this supply area up here. Okay? That would be the most logical place to short. Why is that? Because that's the latest area the banks created of selling short term. Could they remove that area? Sure, they could. If they wanted to, easily. There's no reason why they wouldn't. But if I was forced to short euro, it would be up there because that's the most logical spot. I'm not just randomly shorting hoping it's going to drop because price is hitting the bottom side of a 50 EMA or a 25 EMA or whatever it is that you want to throw on your charts. That's wouldn't be the reason why I would short because that would be completely ridiculous. Looking at RSIs, Bollinger Bands, not going to work for you. I can tell you right now. And if you don't believe me, go and scour the internet and take a look at people. Go to Twitter and hashtag Euro US dollar and see people's analysis. Just see what people are posting. See what trades people are taking, okay? And then compare it to what I'm telling you, and then just watch price play out and see for yourself. You don't have to take my word for it. Just see for yourself. Do me the favor and just go and do that. Please, I beg you. Do that and see what other people are doing. And then you'll see. And then when they post later on, oh, it was a losing trade, you'll be like, yeah, I saw that coming. That was easy to spot. Right, after I told you, okay? This is not a good time to be shorting. People are just crazy. You shouldn't be trading the euro right now because the odds are stacked greatly against you. Where are the high odds trades then? Well, Kevin, if you're not trading the euro now, when would you trade the euro? I'd give it a chance down here. I'd give it a chance to go long down there. That would be somewhat decent. Not high odds, but somewhat decent. I would trade it there, potentially. If it got down there and gave me the right signal, that's where I would go. But anywhere else, no. No. Because anything can happen. Price can continue upwards. The price can drop from where it is right now, and we don't know the path. One thing that's really, really super important to understand is whenever you're taking a trade, you have to be pretty sure of the path that price is going to take. I mention this all the time. The reason why most traders, when they trade, they only take a one-to-one trade. You see this a lot, right? They're going to risk a dollar to get a dollar. The reason why most traders only trade like that is because they have no idea how far price is going to go. And when price goes in their direction, they're so happy that price is going in their direction that they're just willing to take whatever profit they get. And that's a very piss poor attitude to bring to trading. It's a loser's mentality. In trading, if you're going to risk one, you better be aiming for 3, 4, 5, 6 on your money. You have to, okay? Otherwise, what are you trading for? You can't risk one to make one. This is stupid, especially if you don't have a good system to trade, because it's going to work against you. You're going to end up losing more than you make. I'm not confused when I hear most traders lose. I'm like thinking to myself, of course they do. Because all you have to do is see what they do. What they do is they think like losers, they trade like a loser, they use indicators that are only going to give them a losing outcome. So, of course they lose. There's no other reason, there's no other outcome. And when they win, they're lucky. Okay? You have to know the path of price. For instance, if I was to short the euro, like I was saying, if I was forced to short, it would be up here. And the reason being is because logically, if this was an area where the banks were selling, then I would know if price was to go up to this area, that it would likely reverse from this area and head lower. Okay? But head towards where? Well, probably the first spot would be this area here, and the second spot would be this area here. So I automatically now know where my stop loss should be above the supply, where my entry should be, and where my target should be. And as you can see, it's much greater than a one-to-one trade. All right? And the path of price would have to be a move to the upside to the supply, a reversal, and then a move down all the way down to here. That's the path that price would play or move through. If you were to trade it now and go short, you're making a massive assumption that you know that price is going to just go down now. And if you have to come up with a logical explanation as to why price is going to go down now, if you're basing your decision on patterns, you're going to be definitely abused by the market. Because people don't understand context. If you don't understand context, there's no way you're going to be able to trade patterns. Patterns are ridiculous. Okay? Just because certain patterns take place, it doesn't mean that those patterns, next time you see something that resembles that pattern, that the same outcome is going to take place. It doesn't mean that at all. You have to understand context. So when people are like, oh, I see a triple top here, a double top, a head and shoulders pattern, it's ridiculous. You see what you want to see. You don't realize that your eyes will make you see what you want to see. In trading, you can't see what you want to see. You have to see what's actually there. So you should not be looking for patterns. But a lot of people, because they don't understand the markets, they resort to looking at patterns, right? I mean, it's just, you got to think about it. The largest banking institutions in the world, their job is to take the opposite side of your trade. Okay? Their job is to take the opposite side of your trade. What do you think these banks want to do? You think they want to be your little slaves to take the opposite side of your trades and for you to constantly win in the markets and for them to constantly lose? You think that's what they want to be? Or do you think they want to take your money and have you lose? I mean, you know the answer to that because all you got to do is look around and do some research and you'll find out vast majority of traders lose. So what does that tell you? Years and years and years and years and years. You'd think you'd get better at something if you've been doing it for a long time. If humanity was working towards something and becoming better at it, you would think all you'd have to do is go to the library, get these books, read them, learn the same methodology, apply it, and you'd be a winner, right? Okay, so then why isn't that the case? Why are most traders losing? Think about it. Why do most traders lose? You don't think the banks would get these books that teach you all these patterns and use those patterns against you? And think about that. If you were one of the guys that ran one of the biggest banking institutions in the world and you controlled market moves, you amongst the other banks, and you knew that traders were going to try to open up positions and you had to fulfill those positions, but you didn't want to lose your money, you wanted them to lose your money, do you not think it would work in your benefit to go and get some books and learn what traders are being taught on how to trade so you can use that against them? Like, do you think they've done that, folks? I'm telling you, I know it for a fact, okay? Not that I've been to their offices and I've seen, but I've studied the markets enough to know that. I could see it, and it's repeatable over and over and over. And this is what I show students, and this is what we teach. How not to fall for those traps. So if you're shorting euro right now, you're assuming you know the path of price. You're just basing it on nonsense. Okay, so that's why your trades aren't going to work out. There's no high odds situation here. Let's go down to pound. Pound still holding supply. Okay, so there's decent odds that we're going to see a drop in price. Why? Because supply is in play. This is a supply zone created by the banking institutions. My job is to figure out, are they going to use this supply to facilitate a move to the downside? That's what my job is. My job is to locate the institutional buying and selling, to recognize what they're doing with price on each of the time frames, and then discover the path that price is going to take to facilitate what it's about to facilitate. And then if there's a high odds chance of me taking advantage of that move and limiting my risk with big upside potential, then I'm going to take the trade. Would I short the pound right now? No, I wouldn't. I wouldn't. But if I was going to, and people might ask, but why wouldn't you? Oh, because it's not high odds. That's why. But I'll tell you, if I was to short, it would look something like something like that. But you see, risk to reward 2.58 to 1. You know, it's better than the vast majority of what I see people doing out there. But this is what I would do. It would make logical sense to do this. Why? Because your stop loss would be placed above an institutional selling area. Okay. I'm not trading a head and shoulders patterns, which the banks will use against you. I'm not looking for double tops, which the banks will use again. Why do you think so many people complain? Oh, I put my stop loss there and I got stopped out and then price reversed. I mean, it's so obvious, right? Because the textbooks tell you to put your stop loss there. That's why you put your stop loss there. There's no textbooks telling you how to locate institutional buying and selling. And if there are, they're ridiculous. I've seen some people try to teach supply and demand, and most of it is garbage, in my opinion. So there are no textbooks teaching you supply and demand. There's no books. There's no CNBC show that has some expert showing you a chart saying, all right, right here is the selling area of the banks. You know, the banks that own this station that I'm presenting myself on. It doesn't exist. So nobody's trading and nobody's viewing this supply area. Nobody sees this supply zone. Nobody knows that this is a supply zone on a weekly chart that we are sitting inside right now. So nobody's thinking about putting stop losses above this area here. Okay. So if this was to work, it'd be for that reason, because they're holding their supply zone and they're going to eventually drop price because price is inside of a supply zone. And my stop loss is not going to be wicked out like it happens to everybody else. It doesn't happen. Okay? If you trade like everybody else and everybody else is losing, then you can only expect the same result. But would I trade it? No, I wouldn't. It's not high odds. Because why? Weekly charts in a range, hitting some supply. There's decent odds that it's going to drop, but there's also pretty decent odds that price is going to rally up. Okay? So if this was a downward trend on a weekly chart and a weekly supply was contacted and the right signal was presenting itself, yeah, then I would take a short and it would be high odds and I would likely make money from it. If it's not, then I stay away from it. I put my money in other things. Kiwi. We looked at the CFTC data and what did we see? That they were maxing out on short positions, if I'm not mistaken. And so now we're seeing upside pressure. Well, I told you if there's going to be upside pressure, it's going to be from profit taking on shorts. And there you go. But does it make it a good opportunity to go long? Not really. No. And if you thought it was a good opportunity to go long, look, price was sitting inside a demand zone. Good opportunity to go long. Why? Well, because Kevin said they're going to close off their shorts and it's going to make price go higher. So, and I see this demand zone imbalance that looks good. So why don't I trade it? Yeah. What would have happened if you would have traded? You would have been stopped out. The demand zone broke through. That's what I'm saying. The path of price has to be clear. And I'll tell you, the worst paths are created when there's profit taking. Okay? Because the banks are not focusing on driving price through a specific path. Okay? When you're profit taking, it's just like they're just handing out their orders, getting rid of their orders, bum, 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 getting rid of their positions. They're not creating a path from buying. They're just offloading positions. So many times the path is going to be very unpredictable. Most of the times it's going to be very unpredictable, which is why I say when they're profit taking on positions, even though that there's a good likelihood that price is going to move in a certain direction, I wouldn't trade it because I don't know the clear path. And if I don't know the clear path, then I don't know where to base my risk off of. And I'm not just going to open up random positions and have no control of risk. I wouldn't do that. All right. So that's the Kiwi US CAD. Okay, slowly making its way down. You know, I think it's going to drop. That's the odds. And why do I think that? Well, because supply is in play, as we've talked about. So the odds are price is going to drop. Would I short it right now? No, I wouldn't. Why? Because I don't know the path that price is going to take on the way down. I don't know. Is it going to come here, straight down? Is it going to go up again and then down? I don't know. And if I don't know the exact path, then I'm not going to risk it. But if price was to come down to this area of demand, here's a little secret. If price was to come down to that demand, there's a good chance, very good chance that we'll see price rally. But how would I know with a higher degree of certainty that they're going to reverse? Well, you wait for them to create the path. And I know when price comes into an area of demand, let's say like on a monthly chart, I know what kind of path they start to create in order to propel price upwards. And if I start to see the starting formation of that path that they create, then I'll jump in. And I'll be able to reduce my risk and have big upside. So that's what I'm going to do. That's the high odds situation. So that's what I'm going to do. I'm not going to short on a triple head and shoulders pattern, double top nonsense, because the banks are going to create that. You know, if you look at their positioning and you see, oh, they need to offload long positions or they need to offload short positions or whatever the case is, if they need to offload a position, they're going to create the formations and the patterns on the charts to help facilitate them offloading those positions to you. Okay? It's very simple. When you understand these concepts, it's pretty simple. And then when you start to pay attention to the chart, you're like, oh, I see. The banks needed to offload a short position, and what they did was they created a head and shoulders pattern to get me to go short and take their short positions off of them. And then when they offload their shorts, then they push price to the upside. When you start paying attention and you start to know what to look for, you're going to start seeing it. And when you start seeing it, you're going to be pretty surprised. You're going to be pretty surprised. And you're going to have a whole new look, a whole new perspective on the market. And you're going to realize the geniusness, the deceptive methodologies that the banking cartel has created to have you donate your money to them unwillingly. You think you come to these markets and you're like, oh, I got a good chance to make money. I'm going to make a good future for my family. These markets, all I got to do is do the right analysis. I'm going to get that guy's book, that book that guy sells, how to be a master market trader in 3 steps or less. Buy my book. I teach you all the patterns, how to read the patterns, what indicators to put on your chart. You're going to be mastering. Let me show you how I turned $100 into $1,000 overnight. I traded this pattern here mixed with this pattern and this EMA, and look at what the trade did. Yeah, maybe you did that. Unlikely, but maybe you did that. You're showing the one time that pattern actually played out how the textbook tells you it should play out. What he's not showing you is the 55 times that it didn't. He leaves that part out. But you'll soon find that out for yourself. But when you read those books, you're like, oh man, that was pretty simple. Look how many samples he's showing in his book of triple tops and two tops and bottoms and all this crap, and how price played out. It seems so simple. You're like, wow, I'm going to become a multimillionaire. I'm going to refinance my house. I'm going to ask mom and dad for a loan. I'll just locate triple tops and double double bottoms because it's so simple. And you fall for it, and then you find out, oh, wait a minute. Wasn't that a triple top like the book shows? Yeah, but it didn't work. Wasn't that a double bottom like the book shows? Yeah, but it didn't work. Oh, you told me to put the stop loss above the highs, but I got wicked out. Didn't work. You know, if you want to do that, do it. But I'm telling you, you do that, you're gonna the patterns are going to be used against you. So would I be shorting US CAD now? No. Would I be longing US CAD now? No. I'll buy when the banks drop price, if they drop price, to the institutional buying zone that they created a few months ago. Yeah, it's a pain in the ass to wait for the markets to do something for 6 goddamn months. Yes, I know it's a pain in the ass. You know what else is a pain in the ass? Working hard for your money, putting it in the markets and losing it. That's a pain in the ass. So you have to be able to adapt to market conditions and stop being such a suck and figure out what you should be trading and put the odds in your favor. You know, I hear people complaining, oh, you haven't taken a trade in the currency market. So what? I'm making money. Fuck. You're going to complain about that? God damn. Some people are not happy with anything. You could be making money, they're not happy. Losing money, they're not happy. Trading too often, they're not happy. Trading less often, they're not happy. Not happy with nothing. Frankly, I don't really care what people think. I'm here to help teach people how to trade properly. I found out of the kindness of my heart that I was going to share my methodology with people, and believe me, it was very hard to come to the conclusion. It took a long time for me to come to the conclusion that I was going to share my methodology with people, because once I discovered this methodology, I thought to myself, I'm not sharing this with nobody. You crazy? I'm going to make a fortune with this. I could work for big banks. I could be working for big hedge funds, private family offices, killing the market and keeping this methodology secret. I've been asked to do that. I've been contacted by institutional firms, by family offices, by hedge funds, for me to trade with them, to teach their traders my methodology, and to take it away from the public eye. Yeah. Okay. And but I do what I do because I get a lot out of helping people. I'm a Christian. This is what we do. You help people. God gave me this ability because I don't know how the heck I got this ability by myself, to be honest with you. I don't know. I have a difficult time focusing too long on something. I lose patience and lose focus, ability to focus. But for the markets, God gave me this ability to be able to focus on the markets. I don't know, man. But he did give me the ability. You know, I've told you about how I have tested myself for mercury poisoning, and I have a ton of mercury in me from fillings. And one of the things that you're not able to do when you have mercury poison is focusing. And somehow when I moved up here to cottage country and I started a brand new life for myself and my family, I focused my attention on trading the markets, and I put every ounce of my soul into learning the markets. And so this is the situation God gave me. So I feel blessed, and I want to share it with others. So it's up to you what you guys do with it. I'm here to help you. But cut the coffee. It's decaf, my friend. It's not bad for you. All right, so this is the situation with US CAD. I wouldn't touch it until it drops down there. If they drop it, then I'm interested. Same thing with US Swiss. Look at where it's at. Okay, You see how close it came to hitting the area of supply? Yeah, and then it dropped. Why? Because that's a selling area. It didn't even come into the meat of that selling area. But if I was forced to trade this, I would trade it short at that area of supply because it's the logical next spot that price is going to move away from. Am I interested in shorting this? No, I'm not. So I wait. Would I go long? If it were to drop into that demand, there's no doubt in my mind that there'd be some kind of reaction from down here if it got to that area. There's no doubt in my mind, but what's the path of price? If it goes up, where is it going to go up to? How far is it going to go up to? Is it going to go here? I mean, I had these targets when price was back here. Okay? Because the path of price was let me show you something. The path of price was predictable. Okay, price was back here, like this. And I had two targets. I said the path of price is predictable. It's going to likely come up here and then likely come up here, and that's my last target. Why was that my last target? Because I knew with a high degree of certainty that once this target got hit, price was likely going to drop. Okay? And let's play out what took place with price. Price dropped short term, then reversed. There you go. Target one hit. And then look at target two. Boom. Target two hit. Okay. And then what happened with price? Price reversed to the downside. You see? I mean, I gave these targets to members before price even made the move. I see one of your comments, another version of ICT. Don't even mention ICT in his name in association with me. To me, I find that to be an insult. ICT is a fraud, in my opinion. Okay? I've listened to his bullshit stories, and if people want to believe his bullshit, then that's fine. If you want to believe that he was kidnapped and all that nonsense. What was the story? I mean, I couldn't even believe it. The first time I heard that story, I was like, are people actually believing this bullshit? Are people that fucking stupid that they would believe that? Excuse my language, but I mean, it's really fucking ridiculous. I was kidnapped by these people. They wanted me to reveal the code. Like, who the fuck is that fucking stupid to believe that? What horseshit, man. Jesus Christ. Honest to God, guys. Take your fucking head out of your ass. I mean, if I ever shared that story with my father, old school European, if I ever shared that story with my father and said, and people believe him and people think he's like a good trader, my father would just look at me like, why are you wasting my time telling me this bullshit? That's what my father would say. Okay? Oh, yeah, and then he said he's going to enter this competition, and he's going to come in first place, and then he doesn't. And then next year he's going to enter this competition, and then he doesn't. And then next year he's going to enter, and then he shows these trades that he takes, but they're always after the fact. Bullshit. I can smell that from a mile away. So please don't mention ICT's name next to mine. This guy is a phony fraud, okay? What he focuses his attention on is getting people emotionally riled up, and he's a good bullshit marketer, okay? He knows what young people who have zero experience, zero knowledge, zero brains, they know what they fall for. He knows what they fall for, and he just feeds them that bullshit, okay? That's what he does. He doesn't establish a real reputation because he doesn't give a shit about establishing a real reputation. If you cared about establishing a reputation, you'd say something and follow through on your word. So he never does that. So that's obviously pretty clear that he doesn't have a good reputation, okay? Not only does he not have a good reputation, he has zero respect for anybody he talks to because the promises that he makes, he never fulfills them. So doesn't it already tell you that he has zero respect for you? And you're going to trust somebody like that? You're going to believe somebody like that? The fact that people still bring up his name is it's disappointing. You guys are better than that. You guys are better and smarter than that. So please don't associate him with me. And we're nothing alike. Not even close. All right. So, and there's so many bullshit scammers out there, all liars, all liars. All you have to do is listen to what they say. They have zero respect for anybody, zero respect for you. They don't keep their word. They're fake, they're phonies. They show their trades after the fact. Okay? You follow my Telegram channel, I give you the analysis. I tell you what I suspect is going to happen with a high degree of certainty, and then you can see whether I'm right or wrong. Okay? I'm not showing you trades after the fact. If I do show you a trade after the fact, it's because I shared those trades before the fact with my students and members who support me through a membership, who have invested money in their education, so they get that priority information. I'm not going to give free trades to everybody. Excuse me? What am I doing all this work for? Teaching you and teaching you and teaching you. If I'm helping to support you, you help to support me. You guys pay for memberships. That money gets put into my business account. I take that money and I put it into investments, into my future, into my children's future, into the future of the school to become bigger and better. This is what I do. One hand feeds the other. I help you, you help me. This is how it works. And if you want the trades I take before I take them or as I'm actually taking them, you join the school and you pay for that information. The only trades I'll ever share after the fact are the ones that I've already shown and shared with my members. But I show them after the fact to you guys so that you see what we're doing, that it's not nonsense. The Tesla trade I shared with you guys before the fact. I shared the charts with my order, with my stop loss, with my target. I gave you everything. I gave you everything. There's a lot of stuff I share with you guys that if you just paid attention, you'd be like, oh my God, this guy's sharing a lot of trades. You just got to pay attention. US dollar, Japanese yen. Same nonsense. Demands in play, yes. Would I go long? No. Why? Well, what's the data telling you? What's the CFTC data saying? They're taking profits. Okay, so go long if you want to, as they're taking profits. We'll see how that works for you. If you're so eager, look, if you're so eager to make money, then you should be studying, okay? Not taking stupid trades. But a lot of people out there, that's what they do. They're so eager to make money, so they make stupid trades. You don't make money that way. You make money by learning and understanding how the market actually works, knowing when the odds are in your favor, and then you take trades. Then the money will come in. If you focus on the money runs from you. You focus on the learning and having the self-respect to trade based on reality, then the market rewards you. If you're listening to ICT bullshit, and you're like, oh, he makes it look so easy. He's posting the trades after the fact. The market's going to be like, you have no self-respect. The guy posts the trades after the fact, and he's showing you all the money he's making, yet he's never, when he's gone into competitions, he's lost every penny. He's blown up his accounts. Go look for yourself. And I'm going to listen to this guy. I'm going to listen to a guy who has no respect for anybody, blows up accounts, doesn't keep his word, shows trades after the fact, tells bullshit stories that he was kidnapped because he apparently created the algorithm for how the market works. Did he really say this, guys? Or is my leg being pulled when I read this? Did he actually say that? I mean, if somebody came up to me and told me that, my instinct would be to laugh my ass off. And then I'd be thinking to myself, this guy has absolutely no respect for me. To actually tell me some cockamamie story like that, he actually thinks I'm that stupid, I'm going to believe it. My word. So yeah, you're going to listen to a guy like that to teach you how to trade? Listen, if you want to learn how to scam people and how to be a liar and have people believe you, follow him. Just see what he does well, and that's what he can teach you. If somebody does analysis well, takes good trades, has good risk management, risks less than 1%, but beats the market consistently, and this is what you want for your portfolio, for your financial future, to support yourself and your family, for Christ's sakes, then you find the person that does that. Anywho, that just makes sense to me, but maybe it doesn't make sense to everybody. I don't know. Bitcoin. I know my buddy wants to see Bitcoin so badly. Here's Bitcoin, my friend. Here's Bitcoin. Would I trade Bitcoin right now? Answer is no. Period. End of story. I told you the latest area that was contacted was institutional demand. So are we surprised that price went up? No, we're not. But you remember I was telling you about knowing the path of price? If you went long there, you could have put your stop loss below. But once the move has been made and we're up here, you don't want to go long there. The move has already been made. The place to have put your stop loss was below here. If you go long up here, where are you going to put your stop loss? Down here and aim for here? Less than 1-to-1? Why would you ever want to do that? Makes no sense. So, yes, the move up there is likely, yeah, but it could also stop halfway through and go down. Why? Because overall the momentum is to the downside when you look at the higher time frames. That's why. Could they be creating a base here and then end up going higher? Sure they could. They haven't established that yet, so I don't know. So if I was to take a short position now, assuming that price is just going to drop down to institutional demand, I could be in big trouble because I'd be holding that position 3 weeks later. They're creating a new foundation to build upon to shoot price to the upside, and then you lose money. What I'd much rather do is have them retrace price to institutional buying zones and then buy from there. Common sense. Right? Well, it's common sense to me, but it's not to most people. I'd wait for them to retrace price. Show me, prove to me that you're dropping price into demand. Once you've proven that to me, then I'm interested in taking a trade. Because then the odds are that. And like I was saying before, I'd wait for price to come into those areas of demand, for them to create that path that's familiar to me, one that I know they usually create when price comes into higher time frame areas of demand. And once I see them establish this path, I jump on board. And then I ride the wave. But trading it now is not high odds. So I got to be patient. Most people are impatient. I told my friend, don't buy Bitcoin now because it's too high. He was waiting. He bought it. I said, why did you do that? Oh, because it looks like it's not going to go any lower. So I'm like, okay. And then 4 months from now, when it goes lower, you're going to be kicking yourself in the ass because you could have been buying it at 60,000 or 70,000 as opposed to buying it at 95,000. You could have got a significant discount, which means when it starts to rally up, you could be getting much more profit for that time that you were invested in. But no, now you're going to put your money in something that's going to go down in value, and it's going to go into the minus for months and more months until eventually it creeps up to break even, when you could have just been a little bit more patient, waited for two things. Two things you have to wait for. Price drops into institutional demand and shows you proof it's going to go higher, or price is showing you proof that they're building a foundation at this current level, and when they start to take out supply zones and create demand zones, you jump on board then, because now you know price is likely going to go higher. Two things you have to wait for. If you don't wait for those two things, you're gambling. So, patience. People have no patience. But that's what I would do. Okay? You do what you want to do, but I'm just trying to give you some advice, trying to help you guys out. I hope you listen. I hope and pray that you guys listen. Because if you don't, then you're going to constantly be losing money. I can guarantee that. I put a bet against you that if you don't display patience and you don't take this wisdom to heart, and you take this knowledge that I'm passing on to you to heart, that you're going to see consistent losses. That's a bet I would take. You know, it's a bet that I would take. You got to trade smart. You got to apply logic. You got to know what you're doing. Otherwise, you're in trouble. All right, my friends. I think that was good little lesson for you guys. I hope you enjoyed it. And I'll leave you with that. Watch the markets for the rest of the week and see what takes place. In the meantime, I'll be going through my watch list of trades that I know are setting up, and trades that I'll be entering in soon. And then soon, portfolio will be at all-time highs, and I'll be happy, and everybody will be good, and things will continue on in the direction that they're supposed to be heading in. All right, that's it, guys. Enjoy the rest of your day. You take care of yourself. Arrivederci. Thanks for joining.